TGIF warriors, who's ready to react to the reaction? Give me a why. Why you ask? Hi, Ingmar. AJ, give me a C. Just want to see if you do everything I say. I may want to be president one day. AJ, Steve, too many skeletons in my closet, though, guys. Monir, how are you? Mike, Ryan, yes, there's some fabulous prizes. I'll pick door number 3. James Groom, John Hawkins, everyone. Okay, you guys. Saloom, where have you been, man? Huh? Ren, how are you? Good to see you back. Must mean we're going to 7,500 S&Ps. All right, Saloom is back. All right, here we go. Stop the share.
Must be
Ryan.
NFP day, Dale. Everyone's coming in.
Yeah. Well, they want to know how pros handle big numbers. And, talking about numbers, Ryan, what a great number 115 was for weeks. I mean, got to within 5 pips of it. You sell any up there?
No, I didn't.
Okay.
It was just looking so strong. I thought, here we go.
Yeah.
This is it again. Here we go. This is a move. And no, hit its head
Yeah.
and came all the way back down again.
I wish I would have waited for your number, bro. I will in the future because I mean, I almost got picked off my stop on that rally. It was, came in short euro. So on a weekly basis, it's still up on the week. So this is a big number for the dollar, don't you think?
Yeah.
Real big number. We're not that far away from the low of the move here. Actually trying to put in low reversal week. So this is why I, think the dollar is going to bounce. I'm not looking for 103. I'm just looking for a bounce back to this high or around this high in, next several trading days, and then the breakdown towards 96 to 94. So, what I would probably do if it's a weak number is I'd probably fade dollar weakness for, a week. What are you thinking? Anything else in here? Good out the yen. Look, the yen's putting in a good week at a higher low. This does not look
Yeah.
that bad to me.
It seems like it's having a bit of a week off. It's not moving as much as everything else is moving this week. Probably a bit knackered with all the up and down it's been doing recently.
I like the 2 higher lows.
Yeah,
Here and
that's
here.
significant against that 142 level.
Yeah. Yeah.
You could call it 3 higher lows, well, because you had that right
Oh,
on the
yeah.
left-hand side of your chart.
Yeah,
That's your
down
first
there.
one, and yeah.
Yeah.
So that area 142.50 down to the figure is pretty solid. 145 is next up top. 144.90, 145, and then up your line, and then up towards that 146. So I think this is one of those, for several pairs, this is one of those defining moments or potentially defining moments, like you were saying with your Dixie there. Can the dollar bounce? Yeah. Is a bounce likely to last? I'm not so sure. I think rallies get hit and bad news gets hit even harder. So I think it's one of those times you've got to look. We could test 115 again in euro dollar. Could break 115 over a bad number, but can it hold that break? I think that's what you got to look for. If you see any of your big levels breaking, if it hasn't held 10, 15 minutes later, then you've got to be careful with it. And it's trends within trends. You got that May uptrend. That doesn't look like turning around anytime soon. So any good data today, you'll probably see a dip in the euro, and it'll probably get bought up again. And then you got the yearly trend, which is even stronger, as you showed earlier. We've been up all year in euro dollar, and that trend's not for breaking either. So yeah, we could have a moment here. It could be big, or it might be disappointing, like it was yesterday, where we couldn't crack it. Aussie dollar, same pair or same situation. had a break up through 65. Everyone's thinking, yeah, here we go. Or was it do?
Yeah.
It runs into the prior high, and wallop.
Yeah.
Then we go again.
1, 2, 3. Yeah, they all diverged. I mean, all the recovery highs, none of the price action was confirmed. It wasn't confirmed in euro, wasn't confirmed in cable. Look at that, cable could barely get there. And the same with Aussie. Maybe you could tell me, what you think of this. Trader I respect, his name's Danny Diane. I don't know if you know him, but I read some of his stuff, and he said that basically where the 10-year is at, that US dollar yen is way under where it would be if the correlation was holding. I mean, I think he was talking in the 50s. Like 56 is where it should be if it was continued its correlation to the 10-year.
But that's the key point. We haven't continued the correlation. We've got a completely different scenario going on
Okay.
at the moment, and we've been talking about it. Yields rally, but you haven't. But the dollar yen's gone down because it's been a US risk move. Investors getting out of the US, which means they're selling bonds and selling dollars. That was that big move in May when yields were rallying up to 460s, and dollar yen was tumbling all the way down to 142. Can the correlation come back? Absolutely, but it's going to need investors getting back confident about putting their money into the US. You're going to get maybe some intraday moves if the yields rally and dollar yen rallies, but I think a bit like oil and CAD, that's been a very, very loose one for the last few months.
Yeah.
And you just got to identify when those moments happens and when the correlations come back and when they weaken, because then at least you know how to trade it.
One thing I noticed, and I know one day a trend doesn't make, but yesterday you had a nice reversal candle in the 10-year, and they finish up about 4 bips, and the bonds held. Well, they didn't go down. TLT did not go down the way. It's almost like there was one day of flattening. I mean, everyone's so convinced about the steepening. Just something I noticed. I don't know if we're going to, flatten out again. That would mean that there's worry about growth, correct?
Potentially. It means there's worry about growth, but it depends which way it flattens. If it's a long end coming down or the short end going up,
Okay.
it's which way it goes, sort of thing. But
So confusing to me.
And it changes day by day, doesn't it?
Yeah.
You can look at a move. I mean, look at last night. This Musk Trump stuff. I disappeared for the evening to go and have dinner and sit with the family. Everything's fine. I come back and these two are going at it hammer and tong, and stocks are down and Tesla's down 14%, and the world's blowing up, and Epstein files and deportations, and then I wake up this morning and they're all fine and dandy again. But it's another reason why investors will get spooked about trading the US, because you don't need that sort of crap every day.
So they made up. They made up this morning.
Yeah, sort of. I think
don't think.
Karma heads in the White House got put a few phone calls around and said, "Hey, come on, guys,
I mean, they both have so much to lose if you think about it. And good morning, guys. I mean,
Good morning.
Tesla just got crushed yesterday, and you look at Trump coin, you look at the stock market, instant reaction. Soon as all that stuff everybody starts going, "Oh, the bill's in jeopardy." I mean, politically, Trump's got a lot to lose. Financially, Elon's got a lot to lose. So I'm sure it's people are trying to put them together and say, "Come on, guys, let's." Plus, you're making a spectacle. Sorry, I just needed to jump in there.
No, that's exactly right. Exactly right. And if you're a big investor, if you're a big fund, what are you thinking about all that? Are you thinking this is where I want to stick my money for some nice calm yield?
Yeah. Pretty ugly day. Did Trump stock get hit hard too? Was that going on? DJT.
I think it did get hit. Yeah, it was down a little bit. It wasn't like huge.
Yeah, not like this.
DJT, you can pull up DJT. It's
yeah, I have it somewhere. Here it is. Here he is.
Yeah.
Yeah, they look the same. Well, they look kind of the same.
Yeah, it got hit a little.
Magnitude's different, but yeah. Okay, so now we know why they made up. Cost them a lot of market cap yesterday.
Yeah,
Having
money
a
talk.
having a little spat, a little lover spat. Anyway, I'm glad Trump isn't releasing the report and people finding out I was on Epstein Island. So anyway, I don't know if that would ruin my political career. Probably make me more popular in certain circles. So anyway, what's the plan in front of NFP today, Ryan?
Plan is to see what we're going to get first. See what the numbers is. Is this the one that's going to roll over, or is it going to surprise everyone with a big upside number, or is it just going to sit in the middle and everyone just goes down the pub? There's a few things I'm looking at. Aussie dollar, I've got my BDI on. If we get a good number, maybe a move back down to that 64, 40, 50 level. Because I think if we hold there again, that will be a real positive sign. Because that'll be 3, 4, 5 holds at that level now this week, which will be a bullish signal. And then I messed up with dollar CAD yesterday. I managed to get stopped at the absolute low on a long off that 136.50 level. Now it's testing 137, but I don't think we're out of the woods yet. We're too close. So which side we finish at that 136.50 today could be a very key moment.
Okay. Yeah, it looks like a wedge, right? I mean, something like this. And the last two lows that put in higher RSI readings. I don't know. I have a hard time being short this thing. Maybe we got to rally back to 39 or so to get short. Risk kind of closed bad, and now like you said, they made up, and S&P's still about 30 handles off of yesterday's highs. We finally cracked that level where everyone had their stops picked off yesterday on this candle. So right now it's is this just a retrace of yesterday's action? One thing I could say is if we take out this 59.20, there's problems. I'd say 59.20. Yeah, and I had this black line here. So it's, there have been quite a few reactions if you look left at 59.20, and coincidentally, that's what it held yesterday. So if you're a bull, I think that opens the door for 57.50 again, and 56. And for anyone who's long-term bullish, and we're going to have a super bull on for a guest. Peter's going to be with us, and he's one of those 7K guys. So stick around, Saloon. Anyway, he's talking about maybe a correction here. So I just think there's one more shakeout before you blast to new highs. My other friend Jim thinks we'll get the new highs first. That'll complete wave 1 up, and then we get a wave 2 correction. So either way is fine with me. Get your shopping list out for things that you missed. But the only thing that would turn me negative again, besides trading corrections, is going to be this level. Okay. This was the day it recovered right here. And the high here was 55.01. So as long as any correction stays above 55.01, I think the market's okay. All right. Something else might be going on if we take that out, because that was the key level on the recovery. Then it took a few weeks for it to come out of there. So I think that should hold. That should be the worst case on a pullback, in my view. You have a view on risk here, Blake?
It's just that the 6,000 level just keeps holding. I mean, it's got to be very frustrating. I've been trying to figure out what's gonna be the catalyst to drive us above it. Yesterday we broke down through a very minor wedge, but I mean, it's like if you're gonna be short, you know where your risk is. If we get above 6,000, it's because I mean, I actually don't know because I actually thought that the China US news, despite the kabuki theater that we saw with the Trump Musk tussle, I want to call it, regardless of that, and you just, kind of dismiss that. You had a China US meeting. You had Trump and Xi talk, and they're going to have another meeting, a follow-up meeting. And that should have actually put the S&P above 6,000 yesterday.
Yeah.
I mean, I would have thought. And so if that couldn't drive us above 6,000, I mean, we just have to see, I guess today, maybe the market's just waiting for today. If we have good data and let's say we create 100,000 jobs and unemployment rate stays at 4.2%, maybe that's the catalyst that's going to drive us higher, Dale. Maybe the market's just like, yeah, there's a lot of shit going on, and I'm a little worried about the jobs report turning south this month. So, do I really want to step in and get long with the S&P at 6,000 and not able to break? But maybe today's data will be the catalyst that everybody goes, fine, screw it, let's get long. We have to get long. We're missing it. We're missing it, so let's get long here. So
very well could be because
I think so.
This was about 100 pip range between yesterday's high and low, and you tack on 100 over this high, and you got 6108.
Well,
So
it's interesting. Dale, I almost think that you work sometimes behind the scenes, and you moonlight for Goldman Sachs. And I think that you might have been there. Let me go ahead and show you something. If you go over to our news and research room, now remember in Forex Analytics, we have, and I'm going to go through these numbers here in a second, Dale, and I am going to go back to the S&P. But we're going to be focused on obviously all the data here you can find on Forex Analytics. You click on the chat room. We have our news and research room. Michael Brown from Pepperstone, he put this out just a little bit ago, and you can see what would get us a percent higher from where we're currently at, according to Goldman Sachs, or where Dale works and moonlights at night. For Goldman, he probably does.
I was born in the wrong neighborhood, Blake.
Me and you both, kid. If we create more than 150,000 jobs, S&P, Goldman says would be above 1%. Now he goes on, and I'm not going to show you guys the rest of this, just because if you go into the conversation, you can see what J.P. Morgan talks about. Everything else, I'm going to just leave it at that. But if we do get a decent number today, and let's say we create 150,000 jobs, because you never know, we can take 100,000 off revisions next month, and who cares? It's just it's just a revised number that no one's looking at anyway. So if we do rally a percent, that's going to put us in breakout territory, above 6,000, and then once that happens, then it's everybody, it's FOMO. Then it becomes the FOMO trade. Everybody starts, buying after that. But one thing, you were talking about the S&P here, Dale. So I'm just going to show this just to make sure everybody sees it. We are knocking our head up against these high levels. We brief new highs. Relative strength is still divergent. Now, just because relative strength is divergent right now doesn't mean that we can't break out to the upside, because if we do, relative strength will break that divergent relative strength, right? So next thing you know, we'll be up here.
Been there.
Right. I mean, that's how you get around divergence. That's why you don't read too much into it at this moment. But it is divergent, and I think we need to point that out for anybody who's long risk. Plus, it's May. It's June, but it's the time of year where if the market's going to fail, this would be a good year for it to do it. And I was talking to Chris Weston from Pepperstone last night. We did our show a day later because he was traveling. We were just discussing, the idea of, hey, there's a lot going on. Obviously, this whole Trump Musk tussle is bringing a whole new dynamic to the markets. But you got a reconciliation bill that's probably going to struggle, and probably going to have to go through multiple iterations before it actually gets to Donald Trump's desk. And I don't think 4th of July is going to be the date it hits his desk. And I know that's their target, but we might stretch that out into August. So people are going to be on edge about that. Then you have obviously, let's just talk about the jobs report today. Let's say the jobs report comes in, less than stellar. Then you're going into summer months. This could be seasonality where seasonality could actually make sense to be a seller this year versus previous years. Plus you have a Fed that's not going to be too accommodative. You got inflation data. We got CPI and PPI next week, where there's a good chance that we're going to see pretty sticky inflation. So I mean, it would be hard for me to pull the trigger and just start getting long the S&P in the face of all that up at these levels. And I mean, I'm just thinking out loud here. So anyway, I know we talked on and on about the S&P. We should probably talk a little bit about the dollar. And let's just note that Ryan, you've been saying and I know you said this earlier, Dale. Ryan's been saying the 112 to 115 range, and by golly, we got to 114. What do we get? 114.95. 95.
Yeah.
That was a shitty call by Ryan, but
I was going to say he needs to tighten it up a little bit.
Yeah, he does. He tries. We could give him that he tries. So yeah, 115 is definitely resistance. But here's the other thing about the euro. If we break through the highs, and let's say it is weak data, and I mean, you heard Christine Lagarde. She's not pushing back on the euro. And if we have some weak data today, let's say we create 50,000 or less jobs, and unemployment ticks up to 4.3%, which would be 0.1% more than the market's expecting here. You can see it right here. If that happens, the euro is probably going to be trading above 115 today, and there's a good chance we're going to challenge that 116.50 level. Which, if you guys don't know why it's such a big level, just go back to 2005, and then go back to 2015, and then 2016, and then 2020, 2021 post COVID. That was the breakdown point, and then that's where we could end up. And I think it's going to be a huge pivot on any rally. So you got to be real careful with the euro if it hits new highs. I've been yelling about that number for a while, but it's been a big level just in case we do break out to the upside. I'll chase it higher today. I have no problem chasing the euro higher. I do have a problem chasing it higher into 116.50, like once we get there. So if we get there, I should say. So that's one thing I wanted to point out. Also, we need to talk that the US dollar Canadian is in breakdown territory. We have broken this multi-year trend line. It's at 137, and we're set up perfectly for today. We are, because if you look at it and you look at the data that we have today, we have the jobs report that we're expecting 120 some odd thousand jobs. We have the Canadian jobs report where we're expected to lose, or Canada is expected to lose, 12,000 jobs and have a tick higher in unemployment to 7%. So what happens if the U.S. jobs report comes in worse than expected? Let's say we create, I'm just going to throw out a number. Let's say we create 60,000 jobs and unemployment actually ticks higher to 4.3%. Yet Canada doesn't lose 11,000 jobs. Let's say they have a number that comes in flat, and instead of losing jobs, they just they didn't create any, they didn't lose any. But if that is the case, the dollar CAD will break down. We're going to see a continued breakdown here. Now I know we're at 137 right now. It's hard to sit here and go, oh, I be selling right here. I wouldn't be selling ahead of this data, but this is really set up for if Canada impresses and the U.S. does not, we could really see the dollar Canadian break down today. And this is
where would you consider it a false breakdown, Blake?
Today. It'd be today.
I
So
mean, price level. Yeah.
back above like 137 and a quarter, I would
On a
think.
close or
On a
something.
close, yeah. So somewhere like right here, like you can see my mouse. You know,
Yeah.
we
Yeah.
get somewhere up there, and I'm gonna be like, I wouldn't want to be short. And
Yeah.
then you have to think about everybody that let go of the dollar CAD this week. They're gonna get squeezed into weekend. You know what I mean? So
Mhm.
this is one of those Friday moves that you could actually see it. You know, by the end of the day, we could be trading up at 138.50. The flip side of that is if it go back to my other scenario where strong Canadian jobs report, weak US, the dollar CAD could actually slip and be trading, you know, closer to 135 by the end of the day. So I don't rule out either, and I'm willing to trade either situation, but that is the actual development right in front of us that I think we need to be watching today pretty carefully. And the other one, I just need to mention this dollar yen. It is very perky at the moment. So a good jobs number here. We're going to be trading back up to this. You can see the 127% extension. That'll take us right up to triangle resistance right around 145. So that's we're at 144.30 right now. We could trade up 70 pips and not even, you know, bat an eye after a good jobs report today. So those are the three things I'm looking at. How about you, Ryan? You got anything that you want to you want to say before we get ready for this data?
No, not a lot. I'm just getting ready to do all the posts and whatnot. But yeah, no, it's for the loonie, for dollar CAD. If they're both good, then that's going to be you want to go with the US data over the Canadian data.
This is a good point.
Yeah, because
It's a
there's
good
three
point.
scenarios. You get good US data, bad Canadian data, and then you see a big rally. You get bad US data, good Canadian data, you see a big fall. But the middle ground is if they're both good or both bad, but then still lean with the US data, depending on the variation.
Yeah, okay. That's a great point, Ryan. Thanks for bringing that up. And I know you're going to be posting all the stuff in the chat rooms and on our social media and whatnot. So, Dale, we have just a couple of minutes. I'm going to get ready for the data. Steve's here too. So, oh no, Steve left. He's driving to a different part of Greece in a little bit, but that's okay. Dale, what are you looking for today?
Well, I'm still looking for this dollar bounce just to
Okay.
squeeze some of the Johnny come latelys in here. So, still short a little euro from yesterday and long Dixie from yesterday. Stops in Dixie are under the low of the move that 97, what was it, 785 on the Dixie. Yeah, yeah.
Oh, down here.
Down
Oh,
there.
yeah.
Yeah, yeah.
Yeah.
So I think we could get up to where your trend line and red moving averages, maybe even a little better. I
All
like
right,
the
and
divergence.
thank you, Dale. Yeah, I mean, there's we're obviously in a descending channel here in a bear flag. So, but the dollar index could very easily be up at 100. You know, just so you guys know, if you go over to the Forex Analytics chat room, like and you go to the trades room, like I was long euro yesterday, and I ended up closing my euro long and my dollar Canadian short for small losses. But I took them off last night so I could sleep, you know. And if you want to know exactly where I'm buying and selling, like this is, we keep you can actually go through and just see exactly where we're buying and selling things. And we, not just myself, obviously I have a running, trades of what I'm doing here and exactly when I'm pulling positions off. And I talk to people about why I'm doing whatever I'm doing. You can have access to that in the Forex Analytics community. And it's not just me, it's a lot of other traders in there talking what they're doing in the markets, and we post everything. So make sure you check us out there. All right, let's go ahead and grab our oh shoot. I got 30 seconds to do this. Dollar index, here's the yields, and I'm going to put the S&P right here. Let me grab the S&P really quick, and then let me go back, grab from Forex Analytics. Let me grab
Grab that
the
data flash.
data flash really quick, which you guys are going to want to see. Yeah. Okay, here we go. There's data flash. Let me move that over. Let me put the charts right over here. And
5 seconds.
here we go. There's your data flash.
Where?
Woo! Yields going up.
140, 140.
A good
So it's a
number,
beat.
guys.
Yeah.
Good
And good
number.
Canadian data as well.
All right. So let's. And what is the Canadian data?
Plus 8.8 instead of down 10.
Okay. All right. All right. So why isn't the dollar CAD moving, and why did the euro just push through 114? I just picked up the euro below 114. And let's see what
So now
happens here.
Canada's above the breakdown now, right? It hasn't closed.
No, it actually
It's not.
hit 137 and came right back
Oh,
down.
okay.
So I just sold some dollar CAD. I just sold some dollar CAD at 136.91, and I bought some euro below 114 at 113.99. 99. I got a shitty fill there. That's all right. But yeah, I love little dollar strength right now because I'm play right into it. And matter of fact, I'm gonna do a little bit more dollar CAD while I'm here. So yeah, I'm don't
Hope.
mind fading that move. And I missed the sterling, damn it. So anyway, yeah, I picked up a little bit of euro below 114. It's back above 114 right now.
Yeah.
And that's how I'm playing it. All right. Um,
Hey, good job, guys.
hey, thanks. And guys, I want to say be careful this weekend. This is going to be a landmine weekend for headlines between Trump and Musk, and who knows what that's going to happen there. We got to be on the lookout for good China US trade relation headlines over the weekend would be my assumption. Ryan, did you want to say anything else before we head out?
No, that's pretty okay data from the US. It might be a fact that it's not worse, but we've got strong wages. That's back up near 4% at 3.9. Participation rate came down 2 pips, but the unemployment rate stayed unchanged.
I just took a
Um,
quick 10 out of my euro just so you guys know. If
yeah,
anybody's in community, I
Where,
just took a quick
where
10 out of
are
there.
we going to McDonald's?
No, it was a little bit more than McDonald's money,
All right,
but
man.
no.
Anyway, I thought you were buying breakfast. Anyway,
No,
bro.
no.
All right, dream team. Great week. Not an easy week, but some nice calls in the room. So, Ryan, hope you have a great weekend, and you too, Blake.
Thanks,
And
coach.
we'll do it all over again next week. We'll lay it out on the court.
And so
Yeah.
make sure you guys check out Forex Analytics. You want to be in a community with us? It's $1 for 10 days. Come jump in. Use the platform. Get the live squawk feed. Get the PIQ feed. Get our patterns in play. Know exactly what we're doing when we're doing it. Yeah, join us. I'll
And
catch you guys later. Have a great
and
weekend.
don't
I'm gonna film the week ahead video here in a
uh,
couple hours. So
and be like, don't give up. Be like the Pacers. Okay, they were down. It looked like it was over, and they just kept working hard and were persistent, which is what you have to do in this game. Is be persistent, live through adversity, and not quit. So that's the spirit of a warrior, and a lot of you guys have that, and everyone could learn to be one. So have a great weekend, team.
you too, coach.
thanks, mate, and
All
you.
right.
Have a good one.
So my trading warrior brother Peter Goodburn's with us. Peter, it's great to have you back on Face. Missed you.
Great, Dale. Great to tune in around the non-farm payroll numbers, actually, all very exciting.
Yeah, it's like being around the roulette table.
Everybody putting on their positions. I like your quip
Yeah,
about Blake's trade. That was quite
yeah,
funny.
that he's a Marine. He's a Marine. He could be a sniper, and he could also be there for a long-term operation.
I
So
too was also putting in a trade just as the numbers hit. Actually, I got to tell you, I was covering. I was actually covering some eurodollar. I actually bought the
okay,
eurodollar on this dip.
okay, all right.
Yeah.
Well, Peter, why don't you share your screen? Let's talk about what's ahead of us besides bromances breaking up, and never thought I'd see you know, that kind of thing really have an impact on the market, at least for a half an hour or so. So I know, because I read your stuff, Peter, I'm going to allow you to share, that you have shifted and you were right at the top. You looked for 20%, you got it, and you've turned very constructive, very bullish, and I think your longer term objectives well over 7,000. So I remember when I first met you, you weren't known as a bear to me, you know, but that was something that happened over the last year or so because you were looking for what happened. It needed to happen based upon the structure you were going with. So here we go. All right. So this is a shorter term look. Um, so okay.
Yeah, this is the weekly chart on the S&P, so
Oh
we can get
yes. See,
we
look
can
at that.
maybe get a fix on this. I mean,
Yeah.
it's actually been an interesting journey, hasn't it? Really been
Yeah.
from the financial crisis lows when the S&P was at 666. Woohoo! Don't get
Yeah.
spooked out by that number.
Yeah.
But yeah, we've been actually. I think we taped the overall bull run pretty well. You know, we had quite some years back this old 42,000 number on the Dow as well,
Yeah.
which was back in 2011, 2012. And at that time, it was still 20,000. So we were talking about doubling. And now here we are talking about a lot higher even. But I think the intriguing thing for me is that when we take a look at the very long-term picture of S&P or any of the major indices, we often refer to the secular bull market really beginning from the financial crisis lows. Well, this is a terminal fifth wave from the financial crisis lows. And we're actually, you know, what we're seeing here at the moment is the fifth wave of that terminal fifth. So if I show you what the S&P looks like on a monthly chart, let's do that.
I know you're a technician. Anything that you could see, and I know you look at market relationships, yields in the market, and gold. You have it as a counter trend market or correlated negative to the S&Ps. Even though I saw them go up together at times, what do you think is going to drive us up there, Peter? Is it going to be yields? Is it going to be the Fed put coming in, or is it going to be growth? You know, I hear they're talking about 5% GDP coming up here in a quarter or so.
Well, well, I think the main driver at the moment is artificial intelligence, isn't it?
Okay.
Irrespective of what yields do or whatever else, there just seems to be a very strong commitment by investors who are basically awash with cash, to invest in ground level AI development. You know, AI sprung up 18 months, 2 years ago out of nowhere. If you go back to sort of the Industrial Revolution 1 and Industrial Revolution 2, inventors came forward with their individual patents and invented something. But just in the modern era, we're not getting any individual person coming up and saying, yeah, I invented this or I invented that. It's sort of almost sort of, it comes out in a sort of a multi sort of development phase, as if someone's released some information and then individual companies start to put money at work and then start to develop. And this is how inventions are coming out now in the new sort of 21st century production area. And we're not seeing any individual inventors going to a patent office and saying, yeah, I've developed cold fusion and we can all have cheap energy now. You know, this
so there are probably are there any patents on different types of AI, or it's just the wild west?
No, I think it's the wild west. I mean, everybody's got the source codes. It's open, you know, open source code, and people are developing it at different levels. I mean, here we witness sort of like open AI with chat GPT, and then suddenly DeepSeek come out of nowhere. If you don't have access to the source coding of how this development is working, so you go back to a base science level, then you can't participate. But everybody's got it. The Chinese have got it. They're competing with the Indians and the West, everybody in the West. So you're getting this sort of like big onslaught of AI, and it's not going to go away. And I think that, you know, I've been reflecting on the way that the NASDAQ collapsed, you know, after the dot-com peak.
Yeah.
And he went down, what, 75% or something, 78%.
Yes. Yes.
And everybody said at the time, well, that's the end of technology, you know, you can forget that as a sector. Now, what we're seeing today, compared to that boom, we're 3 times, maybe 4 times multiples over the exuberance that we saw in the dot-com phase. And AI is driving it. And I don't think that money is going away anytime fast. I think, you know, we're going to see some really big changes. Listening into a few podcasts just recently with some seminars that are going on in the science field in the US, it seems that there's a very, very strong belief that we're going to see a technical revolution, a bit like the steam engine entering, you know, in the sort of 19th century. It's really big. What's going on?
We have no idea. We have no idea right now. We're sitting here. We could think about it. You know, there's also Paul Tudor Jones is worried about the dark side of it, and you know he's not an alarmist, but
No.
I saw a video by him, and you know he went to a conference, and every expert gave a certain percentage of how it could go bad, and it turned against us.
Yeah.
And you know, Musk says you know 30%, 20%, 10%, whatever. There's a chance that could happen. So that kind of shook him up. Do
No,
you see it? Go ahead.
absolutely.
Yeah, so we don't know what kind of world we're going into. Are you and I just going to be holograms? And I know people already have like I've seen videos where there's people that have their clone doing the broadcast, not a clone, whatever their
Yeah, they have a virtual sort of like
yeah.
Animation, don't they? Yeah.
Yeah.
Well, I mean, UBS in Europe is doing that same now thing with all of their analysts. They're actually going in. They spend a lot of money. They created a studio. They're scanning the face of all of their analysts, and basically, when they write a report, they create a short video with the analyst with AI summarizing the report, and they put it into an animation with them, and it looks like them speaking about some of the highlights, and they put out a 5-10 minute video, you see, of the research report, which ordinarily would take an hour or 2 hours to read. So they're doing everything's changing very quickly. I mean, to me that's not really high tech AI, really. I think the high tech we don't know about. But I just read a report in the Financial Times, I think it was Wednesday's edition, and he said the godfather of AI says the latest models are lying to users. Joshua Bengio attacks the lack of focus on safety and non-profit launch to address basically some of the perils. And he's not the first, of course, to mention this about the ethical subroutines that basically don't exist. From what I know, from talking to a couple of people who are based in Oregon, actually, who are working on some models, I had a very intriguing sort of discussion with them. They were telling me that you know, about some of the limitations to the models, and I said, "Are you using the Fibonacci sequence in your modeling?" And they went, "No. What do you mean?" I said, "Well, I can't really see how your model can really work without modeling around the golden ratio, and its derivatives, because basically that is a harmonious structure for the model to actually work out problem solving." And actually, this conversation I had was in, I think it was two and a half years ago, and since then they've come back and said, "Hey, we've started to model around the golden ratio, and we've got different subroutines giving much better results." Can you believe that? I've no idea how that worked exactly in the modeling because I'm not a programmer. Right. All I did was intuitively suggest that obviously, if you want to harmonize something, and we
Right.
see the harmony in the Fibonacci series in nature and natural things,
Yes.
surely if you're going to create a replicant of how our brain works around the Fibonacci sequence and how nature works with the Fibonacci sequence, surely you've got to incorporate it somehow.
So did they put you on the board of the corporation?
No, they didn't.
You turned their whole deal around.
Well, I
you
mean,
gave them it was a key, or they would have ended up with a failed product.
Maybe, but they did say they got better results. I don't know to what effect that is, and I think a lot of it we don't know exactly what's being tested.
You're like me, Peter. We're humanitarians. Thank you. That was a great idea. I'll go make 100 million, but thank you very much for helping us out.
Yeah, probably.
Anyway,
Probably.
yeah,
How many other times has that happened?
we're laying up treasure in heaven. Anyway, so let's get to it looks to me, Peter, that what led before, people say after a big shakeout there could be new leadership. People have been looking for the Russell, the small caps, but it almost looks like it's basically the Mag 7 that are going to lead this thing to 7,500. Is that correct, or do you see other sectors that would perhaps outperform them?
No, I think that I think that generally speaking, we will see it mainly driven. I think US indices will be driven by the top 10, the FANGs or the Mag 7s. Yeah, there's no doubt about that. I'm just writing a piece at the moment because we're publishing our mid-year stock indices report later this month, and we're still working through a collection of charts where all of our analytics from longer term trends to medium term right up to dailies in this case are compiled. But there's going to be about 100 charts that we're going to be discussing US in different sectors. But I'm just up to compiling. I've finished the US section so far, and I'm just coming into Europe at the moment yesterday. And it seems that basis some of the ratios that we're working with, that is S&P divided by the EUROSTOXX 50, that the EUROSTOXX 50 is going to outperform the S&P for a little while, maybe in the next 12 months. So you've got to be fairly selective. I think that means that if you're going to trade US stocks, which most people, certainly on our client books do, you're going to have to basically concentrate in those Mag 7s or the Mag 12, basically the top 12 or the top 10. Because
and the outperformance in Europe continues.
And the outperformance will continue, yeah, because of the ratios that we're compiling. I can't show it to you now because we're going to keep that back a little bit because of I want to publish that in the report, and it's a very special ratio chart for the S&P divided by the EUROSTOXX 50, but it will clearly show the EUROSTOXX outperforming the S&P 500. But don't forget, the S&P 500, is being run by the Mag 7s or the Mag 10s to 12s, the FANGs indexes and so on. So the best thing to do is to trade those. If you just want your focus on US stocks, you're best to trade those really. Yeah.
Okay.
This is the monthly Nasdaq going back to pre-financial crisis, where the uptrend began from this low in October 2002. Most of the things that we're compiling with the long-term charts at the moment shows that the concluding sequence of the secular bull market. So the secular bull market started in this case in 2002, but the final fifth wave began from the pandemic low, and most of these are all unfolding into diagonals, and they're unfolding into an expanding diagonal, which is even rarer than the contracting type diagonal.
Yeah, I see that.
And
it's like a funnel.
It's like an open gramophone. If you've still got your grandmother's gramophone.
You go. I like that.
Yeah,
a gramophone formation.
Yeah, it's like the old gramophone your grandmother had. And can you hear me?
No, that's a horn in the ear.
Yeah, exactly.
Right? All right.
Yeah.
Go ahead.
Did you say my mummy? Yeah, exactly. And the thing with the diagonal, let's have a look at it on a slightly shorter time frame. Here it is. Here's the cash index for the NASDAQ.
Right.
The interesting thing about it is that it's composed of 3 wave subdivisions in waves 1, 3, and 5, which gives the clue to exactly what the price data is unfolding into. So here's wave 1 from the pandemic low, and you can see that it's unfolded into a zigzag, 3 waves: A, hesitation, B, and C up. There's no third wave acceleration like you would see in an expanding impulse. There's no fourth wave correction. It's all missing. This is a zigzag. It's a fairly unique way to end the uptrend. The first thing it does is it prolongs the uptrend by another few years than it would ordinarily do if it was an expanding impulse. And the second thing is that as an expanding diagonal, and don't forget, originally we had a contracting diagonal with a deeper drop in 2002, but that didn't happen. That didn't materialize. So we had to change it from a contracting to an expanding diagonal. This one demands a really big fourth wave correction because it's got to overlap the top of the first wave here.
Yeah.
And that's going to be quite something. So for the next 12 months, we're talking about a big acceleration up 35% here to 31,500.
You think it takes till next summer?
Probably, yeah.
Okay.
I think so. I think it's going to take a while. I think it's going to, you see, look at the timing here. If we extrapolate this move, even if we go to the absolute tops here, it's going to come in. It's going to take at least towards the, I think it's going to take at least the same time period to get up here.
What is that, a year?
I think, it's about just over a year. It's going to take a while.
All right.
So even if it accelerates faster than this one, it's going to take 12 months.
Okay.
That's about the right time frame. But you see, so we've got huge upside potential here, and if you can leverage into that as well. I mean, for most people, if you don't want to leverage, you buy an ETF, QQQ. Okay, so you don't have to worry about rollovers, futures, margin calls. You just buy it outright, and that's it. If you're trading a 30% gain like this, well, you can make that into 100%.
Yeah.
If you're using leverage.
Right.
You just don't want to overtrade. That's the only thing.
You know, this is a little off track, but I want to get to a commodity market I have an interest in, and it's really because of the growth AI, right? AI. So electricity demand, Peter, is, and we already have issues with it. I mean, even countries loaded with energy in the Middle East are having blackouts, and we had some blackouts in Europe, and I'm sure this summer in the U.S. there are going to be challenges, and I know a lot of people are talking about nuclear, and I believe you were all over uranium, but my interest is in that natural gas is going to have to be the bridge between before nuclear. And I'm looking at, I know it had its initial rally last year. We went from about $1.50 to $5. And and we've been in a pullback mode, but not making new lows. I'm wondering what your view is, because I've seen a case for $10. Okay, so you're looking for down to $1. Wow.
Yeah.
Wow. So
well, I've been tracking this pretty closely. I'm quite confident that we will see another sell-off. I think this swing up here is quite important. This is the April 23 low. So we've gone up. We had a very distinct 3-wave decline and a 5-wave diagonal up there. That's an expanding flat. So that's A, B, C up. That's finished. So that needs to trend down. That needs to break these lows down here somewhere.
Wow.
This low. And then it can start, then it can boom.
Okay, is that similar in WTI? Are they?
No, it's not. It's not really correlated that much.
Okay.
No, I mean, no. It's a completely different animal. It's a bit like comparing sort of copper to iron ore.
Okay.
You think they're in the same sort of production line, but they're completely different patterning.
All right. Well, You know,
Yeah,
I know
so I'm
you.
sorry to destroy your idea about that, but I think you.
No, I thank you.
The only good thing about it is that if I'm right and we get down to here, you've got a golden opportunity to sort of make an 8-fold increase. Look.
Yeah.
So I mean,
that's you know, smells of deflation to me all over the place.
well, I've got an aluminium chart I can show you, which I out of the base metals. I mean, copper's very complex pattern, and I'm reading stuff every day about copper prices. I get research every day from the banks, and everybody's bullish. Everybody and his mother is bullish. And I think copper's actually bearish in a correction that began in 2021. I think we're still due to come down like this a bit more before copper gets the next big leg up, which ties in with natural gas coming down.
So we have a lot of markets coming down into early next year. That includes metals too.
Which ones?
Silver and gold.
Well,
gold.
different rhythm altogether again.
Yeah,
I mean,
gold. Yeah, because of the gold silver ratio. So you can't tie them together anymore. They're going to trade like individual entities with silver outperforming.
Yeah, well, we've got some really big movements on the gold silver ratio this week.
Yeah.
Silver's
back to
really
92, the breakout.
Yeah, silver's. Look at this. I mean, this is real time trading at the moment, 92.58, 59. I mean, it's broken.
Big level.
It's broken all the way down.
Yeah.
And the long term picture is really bullish for silver. Yeah. And I've been talking about silver as an undervalued item. One of the things I read actually this morning, funny enough, was, and we've been talking about a catalyst that would get silver to catch up with gold at some point, you know, confirming this analysis that would see silver begin to outperform gold. And just this morning, I read that the state of Florida has passed a new law which is legalizing gold and silver coins as legal tender.
Okay.
As legal tender. I mean, that's a huge thing for silver, given the price disparity between it and gold. You know, at the moment, you know, you can buy with 1 ounce of gold bullion, you can take 92.64 ounces of silver. Wow.
Yeah.
I mean, that is incredible.
I was pounding the table up above 100 for weeks.
Well, we have been above 100, haven't we?
Right.
And now it's sort of faltered. But I mean, this is ridiculous.
You would have had 10 more silver coins if you'd done the exchange a few weeks ago.
Yeah. Yeah. I mean, here's the gold silver ratio over a long time period. And you can see that when we were at the pandemic high here, I mean, this is a quarterly closing, okay?
Yeah, we're going
so you can have an intraday. But basically, you know, this is historic highs.
Yeah.
You know, you've got to go back 100 years to get anything like it. So it's a great opportunity to buy silver. And, you know, if you can imagine a silver coin now is legal tender in the United States. Sorry, not in the United States, but in Florida at least. I think other states will eventually do that. You know, and can you imagine the amount of buying that people will start to accomplish on silver? This is going to push things up a lot. So, you know, I think we can get $65 on silver easy. I've had some people say,
would you launch here, or is there going to be a better entry?
I would buy some here because I'm not sure if we've got the exact acceleration going right now. Basis the gold silver ratio, it looks as if it will. So I think you have to buy now. Just plunge in, buy a little bit here. I've got, this is basically the silver weekly chart. So I'm heading up to $50. I think so. Basis the gold silver ratio, I think that will be accomplished, you know, in fairly rapid time. The daily chart, you know, is just going up and up and up. So that's cool. We have got one level of resistance, which I've got in my background.
37.
It's 37.5, yeah, here. 37.76 to 37.5, 37.
So if that count works, that would give people in October.
Yeah, if it hits that resistance and suddenly turns down, then you're going to have another you're going to have a much better chance of buying later. But I'm not sure if it's going to work like that. I don't know at the moment. All I know is that basis bid price ratios, there's some very strong resistance here. The main thing that you can do is extend this swing by 61.8, and that converges with the 38% extension of this swing.
Yeah.
So
That's
we know
a
there's a
big area.
confluence of resistance there. Silver being what it's like, you know, it might stall, but if it starts to accelerate above $40, then you know you know that it's gone. It's gone. Yeah, it's on its way. It's on its way to $50 and maybe even more. I've been very conservative with this. I've extended primary wave 1 by 1618 to derive that number. You know, that's still fairly conservative. So I would be long at the moment. I would be long because, you know, if you're long now, if you buy today at $36 and you make $1.50, and then you're a bit leveraged and you want to come out because it's staged a reversal signature, then you're not going to lose any money because you know you can get out within a half a buck. You can still make $1.
Yeah, you
can still make $1. But what you want to do now is buy now.
And hope there's a pullback.
And hope it breaks. Yeah, hope it breaks.
Yeah.
Absolutely. You know, this is the correct strategy to do. So you can buy, you know, you can buy ETFs if you don't want to be leveraged. You can go into SIL, you know, the ETF and things like that. I've got clients who are trading some of the individual stocks. One which I had from an investment client the other week was a company traded on the New York Stock Exchange. It's called KUR, but actually I think that let me just see if I can find it. Sorry. Still going to go to the next page. I got so many pages. Yeah, this is it here.
Coeur d'Alene, CDE.
Yeah, do you know this one?
Yeah, broke out on earnings before the ratio even turned big time.
Yeah, well, I've got a target of about 1054 at the moment, which is getting dangerously close.
Yeah,
and I want to check. That's completing 5 ways back from October 23. So this ratio is a 61.8 correlative ratio. It's normally quite reliable.
And then they're going to cut it in half.
But possibly. Then it could be cut in half if we get a correction back to wave 4, which is only April.
Yeah.
So I'm watching to see how that behaves around this alternate second count for silver. You know, this one.
Right.
That's what I'm watching myself at the moment. For those of you who are tuning into that, yeah, you can.
You know, Peter, I'm so glad you're back in the rotation. You know, some of your structures and your wave counts and your thoughts about AI today, you know, made the hair stand up on my arm. So, you know,
which one?
all of them.
Oh, both of them.
All of them. You know, when I see these targets, you know, I need to calm down after seeing how much potential there is in so many different markets from today on. You know, people dwell on what they missed instead of focusing on what's in front of them. So I want people to know how to follow you.
Oh, great! Thanks. Yeah.
Subscribe. Show your website.
Thank you very much. Yeah, thanks for the PR thing. Well, people tuning in, yeah, you're very welcome to join us. We actually publish the Elliott Wave Compass Report twice a week. It goes out Wednesdays and Fridays, and you can subscribe here. If you go to wavetrack.com up here, and then go to subscription here, you'll see it's the first entry. We've got some others further down, but this is the Elliott Wave Compass Report. And in here, we've got stocks, some of them, some bonds, currencies, and commodities. The commodities are really gold, silver, and oil. The stock indices, most of the major ones, both US, Europe, and elsewhere, and the currencies basically around the G7s, and it's posted twice a week. If you do subscribe, you'll get an immediate login to the main interface, and you'll get also a receipt email telling you how to log in, create your own password, and once you go into the main area, this is the main viewing area, you can just click on anything of these thumbnails. This happens to be stock indices, currencies, get loaded up, fixed income, which is the bonds or the commodities. But for example, if you want to go into and start just from scratch, just click on the S&P, and you're going to the main view area. And there's a couple of other bits and pieces here. You can actually download the PDF on this report or the entire Compass report, which was published here. And you can scroll through at your leisure and take a look. The scrolls are at the bottom here. You can see all of the contracts in that report. So there's about 22 charts per report. So yeah, you're very welcome to join us. We have a great following. People that usually subscribe are with us for life. The retention area is great because people just love the way that we're integrating and looking at the different correlations involved. And so you'll be very welcome to join us.
Yeah, count me as another.
Thanks.
So,
yeah.
All right. So, Peter, have a great summer's not here yet, but I hope pips overtake you like a tsunami, and your cup runneth over.
Thanks, Dale. As always, my friend, thanks a lot. I really appreciate it. God bless you all.
Yeah, Peter Goodburn, everyone. And you can find him on X at ElliotWave_WTI, which is Wave Track International. And you just saw a slice of one of the hardest working. You're not good unless you really are dedicated and compassionate and spend more time than you should with your analysis. If you're just doing the minimum, that's what your expectation should be in trading as well. It takes a lot of hard work, and Peter's a very hard worker. Probably spends 80 hours a week doing this stuff. So thanks again, Peter. Everyone, I hope that I've helped you out with some ideas and some guidance, and mainly for bringing in some excellent guests to edify you. And what a way to bookmark it than with Peter Goodburn. All right, so have a great weekend. Don't just count your waves, count your blessings. See everyone Monday. Could join the team in 8 minutes on the Morning Edge. Adios. You're very welcome, everyone. Thank you, Peter.